Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. Hey, everyone. So another ugly one today, pretty much back-to-back, sort of 5 to 6% days for the S&P and the NASDAQ. A really pretty good drubbing that we haven't seen since 2020, since there was a pandemic. Incredible to think that this is sort of self-imposed. Pretty severe. We did see this curve start to flatten a little bit. This is the VIX futures. So we have the VIX, of course, closing at 45. We noticed early in the week that it was having trouble getting through 30, and that was kind of a source of encouragement, actually, that maybe things weren't getting super, super panicky. But some people were also saying that we still haven't had that blowout event. This is definitely looking more like it, 30 to 45 in a hurry from yesterday's close, and the futures curve not getting any worse. In fact, probably flattening a little bit, probably as people start to get rid of, hedges and things like that.
Subscribe to the channel, please do, and be sure to download my free options cash flow blueprint, a step-by-step guide for how to go from complete beginner to options ninja. Now back to the video.
But there's no question, pretty nasty stuff happening. Let's take a quick look. Here's your S&P weekly. So clearly breaking down out of this channel, and it, a little pause at that 50-week moving average, and then a plunge through here. So we hit that bottom from last August. So this is sort of the spot that I've been talking about a little bit since about 5,700. I said we're probably heading down towards those August lows. Just made sense, right? It's just kind of, it's kind of a beacon almost for market participants. Get down there. Now, can we go lower? Well, probably. Here's your 50% Fibonacci around 4,800, and then down 61.8% down around 4,500. So the question is, where are earnings going? If we do hit a recession, a considerable compression in profit margins, which I've been talking about with years and years of profit margins just expanding, all these price increases during COVID, companies taking full advantage of the situation. Are we going to see an erosion of that? So the market's going to take that into account, right? This sort of price to perfection, price to massive profit margins, price to from a price earnings multiple, very, very rich. So here we are. So where do we land in terms of what the market is worth? Well, some numbers that I've been looking at are kind of anywhere from 4,300 to say 4,800. So 4,300 to 4,800, if you apply a reasonable multiple on the market, and we see a bit of an erosion of earnings. So is that going to happen? I don't know. Technically, I think we're probably due for a bit of reprieve here. And one of the things that I would say is, let's take a look at the gamma profile. So here's your gamma profile, positive down around 5,000. So that's where there's a massive amount of open interest. And some puts below, some dealer long, a lot of puts down there. So I think that could be probably an area where maybe there's some support. You can see these shoots here, maybe lends some support to the market. Remember, positive gamma is generally an okay thing. Having said that, we do see a lot of people, record option volumes today. So over 100 million contracts, put buying huge. People just probably buying to reduce margin as well. People, getting margin calls. So now we have a very, very high level of VIX, high level of option premium, option pricing across the market, and that requires a lot of movement going forward. So at 45, we're pricing in, what is that? Maybe about 2.8% of movement per day, every day for the next 30 days. That is a heck of a lot of movement. So we'll have to see that their theta decay is, as Spot Gamma pointed out, very, very high at this point, right? So when you're holding options up here, you need the movement. Otherwise, you're either going to get a Vega event, which is a compression of volatility, or you're going to get just massive, massive theta every day. So you need that movement to continue. So we need to see these moves, which have been massive. I don't think we can expect 5 and 6% moves every day. There's just no way that's going to happen for much longer. And so then we'll have to see a compression of vol. The question is, where do we get in the meantime? This is of some concern here. HYG, high yield. If credit spreads start to blow out, this is just kind of getting started, but if credit spreads start to blow out, we could have some further problems. So that weekly is pretty spectacular. What a drop in 1 week. We can see here we had these sort of triangulating patterns almost that finally broke down and continued to the downside with momentum, divergence, negative divergence, falling off a cliff. Here's that very, very expanded MACD. Look at that. You rarely you rarely get to those levels. Maybe back in COVID. So very, very serious selling this week. I was picking away at a few things. Some of my favorite names, I just think that are going to come back. Things like Hood, Netflix, Costco, Goldman Sachs a little bit. It's down from what, 640, 650 down to about 460, 470. So big sell off there. Of course, financials getting kind of clobbered. We'll see in a moment here. Here's your VIX, finally getting that breakout above 30. And really not a great close. I have to say for the market, not a great close. It's a bit extended at this point, but I have to say closing on the highs is not really a great look. Here's your S&P daily. So look at that. We were 57.50, hit that 200-day, and then just utterly collapsed. A little bit of that bounce in there that I was looking for, and then I looked for a bit more support in here. Didn't happen. And then once we broke these lows, well, that was it. Here is Apple just getting clobbered. Exposure in China, of course. But look at that. This has been a place of safety, balance sheet hero, massive cash position, considered a place to hide, no longer, right? So 250 down to 187, really quite a spectacular drop for all of these mag names. Here's your S&P again. Look at that, getting pretty darn near 5,000. S&P daily, again, those lows from last August in quick order. So I wouldn't be surprised if we just probe a little bit towards 5,000 and then get a pretty decent move up. Look at this 9 EMA. I mean, it's pointing straight down. When do you see a moving average point straight down like it's, like it's going off a cliff? Here's your QQQ. Similar sort of look on the weekly. Just really ugly after hitting those all-time highs. Just a massive, massive turnaround and pretty much ugly weeks ever since. Quite a spectacular move. Again, we really haven't seen moves like this, since COVID. IWM not being spared, despite the fact that we're probably going to start getting some rate cuts, despite foul Powell saying that we're probably, he's still watching the data and he's not convinced. I imagine he's probably going to have to react at some point here. So this is the worst looking index of them all. 240, 242 down to 177. I think that's down a good 25 to 30% at this point. So well into bear market territory. Here's your 10-year. This isn't great news, right? If it's coming off, which is what Trump wants, he wants the 10-year to come down, the yield to come down. But it may ultimately come down for the wrong reasons, which is a severe slowdown in the economy. So you kind of want to see this stabilize a little bit here for stocks to kind of catch a bid. Here's your semiconductor index. I mean, this is pretty spectacular as well. The place to have been since the early 2023 is just really unraveling, down to 3,500. I feel bad for people in the SOXLs, the leverage products, which I've been telling people to stay the heck away from at this point with realized volatility so big. Here's your XLF, nowhere to hide, doesn't matter, regulations. We saw some IPOs shelved. I'm still picking away a little bit at Goldman at these prices. I always like to own the smartest guys in the room. They're going to figure out a way to make some money here. But as of now, the world has frozen. So here's your XLE. I was pointing out on Samantha's show on Wednesday, I said, these are some cheap hedges, extremely low implied volatility. Well, not extremely, but very low implied volatility and very steep skew. So I was saying, put spreads could really make sense here. What a move in 2 days. Collapse of oil. We'll see if anything starts brewing in Iran. There's some talk that maybe the U.S. is planning an attack, which is going to require some devastating, the kind of bunker busting bombs, because these nuclear facilities are deep underground, and it takes something pretty big to get down there and destroy something like that. So it's going to be, we'll have to see how that goes. But with Trump in power, anything can happen at this point. Bitcoin, one of the bright spots of the week, I have to say, and I have a position on MSTR. that did well today. But look at Bitcoin kind of hanging in there, which has been very sort of risk on from perspective of, Bitcoin fanatics. They kind of think there's a whole bunch more, to it. And that may well be, but if you overlay leverage ETFs, leverage stock to Bitcoin, it's going to look pretty similar. So very surprising that it's hung in there. We're going to have to see here. I'm a little worried that it may finally, in a true liquidation event, we saw gold sell off a little bit today. We saw some stronger stocks like Costco sell off. Quite possible that Bitcoin finally gives it up a little bit if things get a little bit uglier. But very impressive that it's hung in there. But very, possible that it gets down into that 75 to 76,000 level again, if not worse. So that's about it for today. That was a long and exhausting one, and we'll hope for better things next week. So I'll try to do an update on the weekend on some other things. See you soon.